point of view is very important is what is the technology rails? So let's say, a central bank was to say, I'm going to issue it on XYZ technology. Either you're picking a winner and making someone very happy, or you are dictating what everyone has to operate on. So technology becomes another important challenge where you want a CBDC to be quite interoperable.
Well, as Wolfgang mentioned, we're seeing that a digital economy is really demanding new automated and efficient systems from financial services across the landscape. But in the payments area, this is particularly acute. And over the last decade, new technology is testing a lot of the assumptions that we've had about the stores of value, units of exchange, the functionality that's possible, and who performs what roles in the systems. So we saw in the early days, Bitcoin proved that decentralized P2P systems could really challenge a lot of our assumptions. Last year with Facebook's Libra proposal, we saw a really renewed focus on this sector because of this catalyst for attention and change. And it's really accelerated a lot of the work that had already been underway in the commercial and central banks of the world. But it proved that a company with 2.4 billion customers around the world really could step forward and quite rapidly have the potential to remake the landscape. This year we've seen announcements and a lot of expectation that the People's Bank of China will be one of the first major central banks of the world to come forward. We've seen other smaller central banks already in pilot phase with live deployment. And of course we've seen a lot of exciting developments in our commercial banking sector as well. So to better understand this landscape, I wanted our panelists to first start off with what they saw as the drivers behind this movement. What are the drivers and the new technologies that we see? And maybe we'll start with you, Umar.
So first of all, thanks for having me. I think there's two things. One is I will start with a vision of how you think about this. So to compare it to a very easy example, I mean, if I had to send, say, a photograph anywhere in the world, I just get on the email, attach the photo, and send it. And it's done. Now, obviously, money is a bit more complicated than a photograph in terms of, you can't have duplicates and things of that nature. But really, people want to get to a point where money is just as easy to transact in on an electronic basis. So even though a lot of the money in the world is electronic because of cards and because of e-wallets and whatnot, it doesn't operate with that level of ease. So that's sort of, I would say, the long-term goal as everyone looks at it. But more specifically, I think I would go back again to the example Conan you mentioned on Bitcoin or Ether. It is a pretty phenomenal thing that two people can transact in something without a central counterparty involved, and they can rely on the fact that what one of them gave to the other one actually gets transacted and now it belongs to the other person. So that distributed nature of this technology that has evolved opens up new doors. So as we think about the future, we think of those things as driving the future of money and being able to do things that we haven't been able to do so far. Things like programming the money to act certain ways, or things like programming the money to actually behave or release itself when certain conditions are met. I think that's how we look at it, and that's why we've been developing products in this area.
Yasmin, sitting in a central bank, how do you view the drivers for this change?
First of all, thank you, Conan, for having me, and I think it's a pretty important topic. CBDCs and digital currencies in general have really become a hot topic nowadays, and I truly believe that 2020 is the year for digital currencies. Now, some people may argue and say that central banks have started to look at CBDCs or digital money in general as a direct result of Libra. But I personally believe that it's just a natural evolution. I mean, we are embarking on a new era, a new digitized era. We're moving towards digitized economies. So I believe it's very important and imperative that central banks really take a close look at digital currencies, and those that fail to do so may struggle in the future. I think in terms of money supply and methods of payments nowadays, if you think about it, we have been depending on electronic money for a long time now, for decades and decades ago, ever since the invention of debit cards or credit cards. But I think today, if we combine the advent of smartphones along with the advancements in technologies, such as distributed ledger technologies, the internet, having more efficient telecommunications, for example, all these combined together will drive people to demand more efficient, easier peer-to-peer payments and transactions. And I think digital currencies really are promising to provide just that.
And I also think as we view 5G coming online around the world, a brave new world of connected devices that will have a lot of automation and logic built into them, that's when you start to understand how this, these stores of value and mediums of exchange need to keep pace with the digital economy.
Exactly. If I just may add to that, I mean, digital currencies in general hold a lot of promises in terms of whether it's for local domestic peer-to-peer transactions, making them more efficient, especially in developing countries where their local RTGS systems are not very efficient, for example. They hold a lot of promises in providing more efficient cross-border transactions, bypassing the traditional interbank correspondent banking systems today. They hold a lot of promises in terms of financial inclusion, for example, more promises in terms of traceability for the regulators. But I believe that it's still very, very early days, and that it's important that central banks really study them very, very well and measure the trade-offs between the benefits and the risk implications.
So let's talk for a second about hotspots that we see around the world. Benoit Curé is moving from France to the BIS, where he'll head up their new innovation hubs around the world. We see, as I mentioned, China's made some announcements, Banque de France, ECB, maybe a little bit of flavor of where you see some of the leading developments around the world.
So I think, I mean, obviously, again, if you look at examples, there's examples like Cambodia, where they've done CBDC already. You have China, which has announced something. You have, you have the e-krona project, which has just been announced, or publicly it's been out there, but maybe became a little bit more specific in terms of timelines. So there's various parties that are doing it at what I would call a governmental level. I mean, BIS has been now, I think, quite active recently in this topic, put out a couple of very insightful white papers as well, where it's pretty clear they're thinking about this in some depth. And I can tell you that the rest of the central banks, at least the ones I've interacted with, or my team has interacted with, everyone's studying it at some level, some very deeply, some less so, but everyone wants to know enough about the technology to not be blindsided by something. But they're also, obviously, central banks' responsibility is also things like monetary policy and the health of the system. So they are approaching it from a different point of view than, say, a private enterprise that's trying to build the same thing, or a non-banking player who's doing it. So a lot of work is going on in that sector. But I think then, even in the commercial sector, whether that's from the technology side or even from the commercial banking side, there's lots of activity, including ourselves, and people who are trying to push this thing forward right now.
Yeah, according to a report issued by the BIS back in January, around 80% of central banks around the world today are embarking on some sorts of pilots for testing out use cases for digital currencies. I think there's a very thin line here as to the use cases and motives for testing out digital currencies based on how developed the economy is. For example, emerging countries, Omar mentioned the example of Cambodia. Add to that the example of the East Caribbean with their digitized dollar, for example. I think the main motive there in emerging countries is to pilot and test out digital currencies to help with local peer-to-peer transactions, to move away from the heavy dependence on cash, and in some instances as well, to strengthen the power of the local currency. For example, in the Caribbean, the population is really heavily today using cash, which is very costly and not very efficient. So as a means to encourage the population to invest and to start using digital means of payments and transactions, the government is embarking on this pilot. If we move on to the more developed countries, we will start to see that the motives there, or the use cases, move towards exploring using digital currencies for cross-border transactions more. As an example, Project Ubin in Singapore, they're really exploring the use of blockchain, DLT technology in terms of cross-border settlements, clearing. A regional example, the Kingdom of Saudi Arabia has partnered with the UAE They've created a digital currency to test cross-border payments and transactions in that sense. In general, I think there are a lot of use cases out there, and I think that central banks are really starting to look at digital currencies very closely.
And I think that the BIS survey that you mentioned, they've done this annually now for a couple of years, and it looks like central banks that serve approximately 20% of the Earth's population describe themselves in advanced planning and testing for central bank digital currencies. So with that, I wanted to pivot a little bit to what your organizations are doing yourselves. And maybe Yasmin, we could start with what is the Bank of Bahrain doing?
So at the Central Bank of Bahrain, we are embarking on a pilot to test out an electronic currency of our legal tender, the e-dinar. It's still very early stages. We're still in the phase of exploring and trying to decide on the technology to be used, on the design aspects. But in general, we will be looking at specific features, including but not limited to, for example, basing it on distributed ledger technology. It's going to be a private platform. We're going to have multiple authentication nodes. It will primarily be based on wallet-to-wallet, peer-to-peer local transactions only. We are looking to have some level of anonymity into it, because we believe that that will really encourage people to start using it more. We are also thinking of having our local digital currency to be not compensated, in the sense it will be non-interest bearing, and we have that is a conscious decision as to not disrupt the local commercial banking scene. Things like security, of course, are very important to us. We are also looking very closely at user experience, the speed of transaction, and finality. So all these aspects are very important to us.
Well, and I think that that's very useful for people to hear, because there are so many different design considerations. We see that single label of CBDC that's sort of rocketing all around the world right now, but there's really a very broad spectrum of different designs and different types that might be developed and deployed with a lot of different implications. And I think I'd like us to dive into that a bit later. But now, JP Morgan made a big splash when JPM coin launched. And so, Umar, if you could tell us a little bit about why the coin came to be, what its design considerations were, and the needs in the marketplace that you were addressing.
So I think, partly it goes back to the fact that we have had a very big presence in the blockchain landscape for many years, and I think we probably have, possibly have the biggest blockchain team out there amongst banks, if not actually generally in the world. It's one of the biggest. So from our point of view, we saw early promise in the technology and how it could revolutionize how systems work, whether you need reconciliations, how information could be exchanged along with money, all those things. So our thesis was that having a digital currency that could operate on a distributed ledger was quite essential, to the extent that distributed ledgers became more common in the world, whether in securities, commodities, or any of the other areas that our bank interacts with, trade finance, etc. So that's how it kind of started a year ago. And frankly, the technology part of this is not the hardest thing to solve. We actually have very good technologists who are working on this. It's been everything else that's quite complicated. So I think one is just to kind of have everyone sort of slow down and not get excited about the name of the thing is quite important. Because just because someone says it's a coin based on distributed ledger, you can have a lot of people jumping up and down because they're all panicked. But in reality, it's just a new technology of doing things that we already do, but hopefully just much better, much quicker, and a lot smarter. So we've been working a lot over the last year. So to give you an example, we pump out, I think, more than 10,000 feeds out of our deposit systems to various regulators across the world, because we are regulated pretty much across the world. I mean, if you're going to build something that's going to act in a similar fashion, we would have to build it to a level of spec where it's safe as our core systems, and it can actually report to our regulators in a very similar way. So that takes a lot of industrial development over the last year. But what we really see the promise of this thing is less around things like anonymity, because our clients, I think, when they're doing large wholesale payments, anonymity is not the primary concern they have. It's things like how efficient is the payment, can I settle things right away, things of that nature. So we sort of see this in two general ways going forward. One is in areas where you have securities and commodities and other assets. Can we actually create mechanisms where settlement and clearing can be as close to instant as possible, and possibly even, sort of what I would call pre-programmed. And then secondly, other areas where you can do certain things with the money, where if you attach it to certain sorts of identity tokens, you could make the money effectively money laundering proof, almost by design. So you could have white lists where it says only X, Y, Z, or these 5 people can hold this money, or 5 corporations can hold this money. They just can't go outside the loop. So you actually, one, can improve the controls environment a lot, and secondly, things where you can actually program the money to do certain things when certain conditions are met. So you could almost create self-escrowing money as well, where right now a lot of conditions have to be checked manually or at least electronically, and all of those things could be built into the platform itself. So as we think of the future, we think there's going to be a number of applications, which some of them we probably haven't even imagined yet, including some stuff that's going to come from 5G, where you have a very high velocity and very high number of transactions that are going point to point, and you don't want reconciliation. That could be an example. Or frankly, other areas where information rails and money rails have been problematic. So think of many parts of the world, healthcare, where the bills go in one rail and the money goes in another rail, and you have tons of people who are trying to figure out what you're paying for. All of these things could get revolutionized with the technology.
And as you thought about that, you gave the crowd, I think, a good flavor of what did you design for. You mentioned that it's wholesale. You mentioned some of the applications that you saw for it. Are there some early sort of success stories that you've seen where you had a hypothesis of why this might be a better mousetrap and it's been borne out?
So I think we are still basically in testing, primarily because the product is still early in the life cycle. But there's been areas where it's really borne out. I would say some of the work that we've done in sort of the digital security space has been quite interesting, where we can change the velocity of the market by having electronic money and electronic securities on the same network, where they can be exchanged through a atomic DVP or a delivery versus payment mechanism. We've also seen some early success in building clearing networks based on a digital currency. So the work we've been involved in, and Yasmin mentioned, with Project Ubin with the Monetary Authority of Singapore, where the work is based on the JPM coin construct, where you can essentially right now within the border of Singapore, but go beyond that, within the borders of Singapore, you can actually clear US dollars 24/7, 365 using a coin construct amongst wholesale players. So there's been some early successes. But I'm sure we'll also see some places where it won't work as time goes by. So.
And Yasmin, as you look at JPM Coin and see what they're building, how does that inform how the Bank of Bahrain looks at this space, and as you think about partnerships and how you serve a digitizing economy?
So we believe that partnerships and collaborations are very important. Digitization is really has a ripple effect. We're going to start operating cross borders. So I think that it's very important that central banks come together and partner with the private sector as well. For instance, when it comes to the JPM coin, that is something that we're really interested to partnering with JP Morgan on testing out. We're also a member of the Global Financial Innovation Network, and that's a network that brings together policymakers from all around the world to discuss issues like this, like how digitization, how digital currencies and other fintech-related issues might impact our economies going forward, and to work on some challenge questions together. In terms of technology, I just wanted to comment that's a very important aspect as to when it comes to designing the CBDC, and something that central banks really have to think very carefully about. And maybe we can speak a little bit more about the design implications later on. But in general, we at the Central Bank of Bahrain, we have decided to partner with the World Economic Forum, and we have been onboarded onto their CBDC policymaker toolkit. And it's a high-level guidance that has been put in place for regulators like us to help us make more informed decisions when it comes to designing our CBDCs in terms of technology, in terms of the different design aspects of it.
Maybe, why don't we just go there now? Umar, if you could maybe walk folks through some of the different design considerations that the central bank might be looking at, wholesale, retail, token-based, account-based, and give a little flavor of that broad spectrum that's being sort of branded under a single term.
Yeah, obviously, when we look at the CBDC projects from outside in as a large, commercial bank, and I think when we look at it, there's a lot of questions that come up. First of all, and by the, some of those questions are equally applicable to our product. One is, to what extent are there real now applications? To what extent will there be applications in the future? And to what extent any of these projects are driven by what is, called FOMO, which is fear of missing out. And sort of, are you just doing it because, well, I don't do it, someone else will do it. So there's those factors, but I think the design considerations are very real and can have significant impact. So, for instance, are you going to distribute it directly? If it's a CBDC, is it directly distributed or is it indirectly distributed? Because if you directly distribute a CBDC to, say, corporates or consumers, you are effectively getting into banking directly. So central banks, most of them, or most significant central banks in the world, have avoided becoming thin banks over time, primarily because that has implications